I just recently got done watching Fight Club for the first time in about 2 years. I watched it 7 times in the theaters in 1999. It was my mantra and much of the philosophy I clung to. It is what helped drive me toward anti-materialism and simplicity. However, watching it now in this terrible economy, the movie has become so irrelevant. It makes me wish that materialism was the worst of our problems, and we had the luxury that we needed to be told that we are not our job. The problem with the 90s and the era of Fight Club was the fact that we were being financially successful. The market was booming, and much of it was caused by deregulation. In 2000, we were actually going into a mini recession because of it, but in 1999 and 2001, Deregulation Act swept the board and allowed banks to make riskier and riskier loans with no financial backing. Advertising encouraged and idealized materialism, buying stuff we didn't need with money we didn't have. Without regulation in banking, this is a pattern that occurs worldwide. Iceland, Ireland, and Greece all went through a period where young adults went from bicycles or used cars to expensive luxury cars in a period of a few decades. These loans were, of course, backed on a promise only, and when the global economy collapsed, there was no one to buy their goods, and suddenly everyone, including the country, had to go into bankruptcy. The conservative libertarian mindset says just let them fail, they'll learn. But it doesn't just affect the banks, it affects the investors who were planning on retiring, and the workers who now can't get a job because the business he works for can no longer get any credit needed to grow and keep him employed. In fact, prior to the Federal Reserve in 1913 forming, we were having a market crash every 20 years, mostly because the rich would continuously speculate and corner the market on gold. Without stability in the market, growth would not occur, or would occur at 2 steps forward and 1.5 steps back. Something that easy credit also does is massively reduces savings and investing for the future. If you're buying everything on credit because paying it back is so cheap, why bother saving? The only people who come out on top in the recession were people who saved slow and steady without investing in the stock market or housing. People stopped seeing houses as places to store their money in, but a thing to make money on as the bubble rose because credit based on a promise was so easy to get. Regulation, when done correctly, does work in stabilizing the market. Some Americans think of Canada as our cold and slightly poorer neighbor, but there's a reason for this. Canada is using the slow and steady model. Canada did not have a recession during the global crisis. Canada has a tight regulation on their banks, and while we were speculating and giving out easy credit like candy with money that didn't exist, they were slowly growing. After the crisis hit, there was a slight hiccup in the Canadian market, but it stabilized in the next quarter and the slow and steady growth continued. Any financial analyst will tell you borrowing should only be used as a way to invest. Investing in your future with education, investing in a home, investing in a startup for a business. Government should invest in its citizens with education and infrastructure. These are the sorts of debt that are excellent and are worth it in the long run, and they will eventually pay you back even more so. Getting a loan for that fancy car you wanted sounds awesome, and if credit is really easy to get, temptation can be overpowering. However, you will end up paying a lot more than you ever put into it, especially since cars begin to depreciate the minute you drive them off the lot. You will never get that money back. You will be throwing it away for a thrill and end up paying twice of what you would have had you paid cash for it that you saved up. I had a coworker from Russia who was comparing prices of vehicles with her friends across the pond and found the same car in Russia was significantly cheaper than a car in the US. This is because in Russia, if you want to buy a car, you save up money and go buy it. If you buy a car in America, you can have a high-pressure salesman push you into getting a fairly easy high-interest rate loan. Easy credit messes with the free market as it inflates prices that really aren't worth it as much. When the market crashes, deflation occurs, causing a serious loss of money. The U.S. government, especially now, uses non-investments as a way to win votes and racks up the deficit and the debt. The Bush tax cuts were put directly on the debt, and wars in Afghanistan and Iraq were put directly on our tab, and we have gotten nothing as a nation out of them. Iraq is slightly more stable after a decade of instability, but they weren't a threat to us under Saddam, no WMDs. We haven't gotten oil out of it or anything. Afghanistan is way less stable now. We will get nothing from them, and most of our safety and lack of attacks came from better homeland security and beefed up intelligence, which was severely lacking before 9/11. A Republican voter will say the government health care is a takeover and using money we can't afford. However, bankruptcy causes a lot of instability for America as a whole, and if a disease like cancer pushes a lot of people into foreclosure, markets will be unstable. It will ensure that a person with good credit can lose their home overnight. One of the major reasons for the rise in easy credit is because the banks can make so much money that they have some of the most expensive lobbyists in Washington. This unfettered lobbying and now campaign contributions allowed them to create easy, high-interest credit out of thin air and target young, dumb college kids or fresh into the military recruits for easy, high-interest credit or loans. This is why, if you haven't already, get your money out of a bank, especially a large bank, and put your money into a credit union. A credit union uses no tricks such as exorbitant fees for overdraft. You can vote out the president of the company. They always have the lowest interest rates possible. They don't charge you to keep money in an account. They ensure you can afford your loan before they give it to you. And if you live in a state with a network, you can do your banking at almost any other credit union in the area. Credit unions follow the slow and steady model of credit and are owned by the members. They had nothing to do with the meltdown and didn't suffer very much at all from it either. Easy credit is an enjoy now, pay later system, and the payment is extremely painful.